Hi, this is Alvin Taveras, President and CEO of Build2Rent. And today we're going to be talking about why small and mighty investors are buying more while everyone else is retracting. Additionally, we're going to talk about why institutional funds are slowing down their acquisitions and why smaller investors have an edge over them. Okay, so number one, we're going to talk about lending terms. Believe it or not, a mom and pop smaller investor has several advantages when it comes to their loan terms compared to some of these bigger groups. There are a lot of investors that question me on this. They say, hey, there's no way that a deal is going to cash flow at 6 or 7% interest rate. And I asked them, like, okay, so for yourself, when would you invest? At what interest rate would you feel comfortable investing in today's market? And they'll tell me, well, when interest rates get to about 5.5 to maybe even 5% is when I'll feel comfortable buying again. Okay, I'll ask them, would you buy real estate today if you can get an interest rate at 3.75%? And the answer is, of course, that's like going back in time. Well, that's what we're doing today. We're currently getting interest rates as low as 3.75% for our investors. We also do DSCRs as low as 5.5%. So these are incredible deals that are way below today's interest rates. And it's the reasons why smaller investors can go ahead and plow into today's market. Certain lending options that they have available aren't the same type of lending terms that bigger institutions have. Number two is a shocker, and it may surprise you, but basically there were just way too many institutional funds, too many syndications happening, especially during COVID period. There was just way too many groups that were gathering funds, buying properties, and they all had poor evaluations of the future market. They were all anticipating that 20% rent growth was going to continue. They're all thinking that they're going to do some minor repairs on the property and flip it quickly in 2 years. And a lot of these groups got swallowed alive. And so the institutional funds who are funded by individual investors are saying, well, I can just buy a better deal myself than giving you money. Additionally, when you buy a REIT or you buy a syndication or you put in money into someone else's hand, there's typically a management fee. And that manager gets paid regardless of how that fund operates. So for example, if the deal is losing money, they don't care because they get paid based on the amount that they're managing. So they'll manage a fund of $2 billion. They get paid a percentage of that. Typically, it's about 2% is what a manager would pay to manage just the fund. Keep in mind that you might still have a property manager on top of that. So a lot of times it's your manager managing the manager managing the manager. And all of those managers have their own fees. So when you buy direct, when a mom and pop buys direct and they buy a property themselves, there is no manager besides the property management who's actually doing the work. But if you can source the deal yourself, why would you have more middlemen involved in the deal? Additionally, when you look at the benefits of tax depreciation, that's going to be big in this year, especially with bonus depreciation, the tax cuts that just came in. Why would you give up those benefits? You can buy the property yourself with no middleman involved. You can work with your own tax professional and work out which tax strategy works best for you. A lot of investors are going to lean in towards that bonus depreciation. And that's something that you have way more control of when you own the actual property, as opposed to if you bought it from a REIT or a syndication or some other entity. Number three is going to be the time horizon. Most mom and pop smaller investors have longer time horizons. Their goals are typically more 10 or 20 years oriented. So you're going to take advantage of the market appreciation, the depreciation for the tax benefits, the cash flow, and the debt pay down. As a smaller investor, you're thinking more of a 10 to 20 year time period. Those benefits are all magnified when you accelerate over a period of time. A lot of REITs or syndications really push the 3-year return. And right now, when we're kind of in a flat market, we don't know which way appreciation can go. Rent has been flat. If you're in one of these overbuilt markets, you might be seeing rents decrease. It's just overall scary. So a lot of institution funds are just backing away. They can't sell. And a lot of these investors are saying, hey, I can find these deals myself. Let me go ahead and source them and go ahead and acquire these properties directly. So with that, we have number four, which is institutional funds are usually looking at bigger deals. So for smaller investors, 1 to 4 deals may be enough for a year. An institutional fund is greedy. They have a bigger appetite. And right now we're seeing a lot of the bigger properties get destroyed. If you look at retail, it's a bloody mess. Amazon is destroying these guys. You got Temu, you got all these Sheins, all these cheap direct-to-consumer delivery services, absolutely obliterating retail. Now, will retail ever go away? No, but it is hard to make the math work. And so there's just a lot less funds going into retail. If you look at some of these large residential properties, we still have a backlog of some of these large buildings being completed, especially in some of these major centers. They're all fighting to the bottom, right? They're all trying to get lower rents, more incentives. Some of these markets are going to see a lot of rental decline, especially when you're being sold that you're going to see a lot of rent appreciation. You're going to be able to sell this property for a multiple. A lot of that's not going to pan out to be true, and you can no longer forecast that. The individual investor who invests inside of these institutions is very aware of just what the future outlook is, and it makes it very unappetizing. So a lot of these funds are asking their investors to put more money in to help cover the spread. Some investors are trying to get their money out. There's this whole battle happening internally with the institutional side that's not happening on the individual investor side. So from our perspective, we've been able to strive when everyone else has been struggling. And we sell to some of these REITs, we sell to some of these syndications, but our bread and butter has been the mom and pop investor. And so the way that we do these deals, we use the same system that these REITs and larger institutions have. We provide those same advantages to our individual investors. So when we negotiate on behalf of our investors, we're negotiating on behalf of our institutional investors, on behalf of our REIT investors, on behalf of our family office investors, and our mom and pop investors. These are smaller investors. So we have investors that are buying their first real estate property the same way that an institutional fund would buy them. They're getting the same price, the same deal. All these incentives are exactly the same. And because we negotiate based on volume, our investors benefit because they're getting much lower prices, much better incentives, and a much more streamlined process overall. We currently have over $1 billion worth of inventory that we have to sell. The majority of our inventory will be sold before it's completed. And so it kind of puts that urgency to sell the volume that's already on its way to being done. So what I'm going to go ahead and do is I don't normally push a lot of the build to rent stuff, but because this video is designed for smaller investors, I want to make sure you have access to the inventory. You can click on the link below. It'll be in the comment section or in the description, and it'll have access to our full inventory link. You can click on that. It'll open up a spreadsheet, and you can see all the inventory that we have. Guys, thanks for watching the video all the way through to the end. Now I want to hear from you. Are you currently sitting on your hands? Are you looking for deals? Are you actively acquiring properties? Where are you currently on your investment journey? Additionally, I want to know what concerns you have about today's market. Maybe there's a solution in place that you're just not aware of. If you have any recommendations for our next videos, please leave it in the comment section. I'll be replying to each and every one of them. Until then, we'll see you next time.